Hey guys, happy Friday. Welcome to our weekly live stream and good morning, good afternoon, and good evening to wherever you are watching our live stream. The crypto market after the bank crisis has been moving sideways and the volatility is going down. Many of you may wonder what direction will the crypto market move, especially with the ETH Shanghai upgrade coming. So in this video, our trader Jay will go through the market trend and introducing some trading opportunities right now. And feel free to comment in the chat box with any questions you have. And let's welcome Jay.
Hey guys, hey Shia. Thank you for everybody joining today. Hope everyone's having a great, afternoon for us right here in the US. But wherever you guys are, wish you guys are having good morning, good afternoon, or good night. Welcome to the Pinex live stream. Welcome to the show where we talk about our thoughts about the market, maybe give you guys some advice on what type of trades that we are placing so you guys can maybe take those trades or use our trade ideas to formulate your own ideas. So if you guys want to be part of the community, hit that subscribe button, hit that like button for the YouTube algo so more people can find our video and more people can join our community, as well as just promote the cryptocurrency community in general. As you guys know, crypto is very crowd driven. The more people who are here, the more people in the crypto verse, the better crypto will perform. So make sure you guys hit that like button, hit that subscribe button, and get more people on here. This is good for the community, good for the whole crypto ecosystem all together. So before we jump in, just want to thank everybody for coming here and joining us for this live stream. If you guys have any questions or anything you want us to cover, put it in the chat and we will get to it one by one. So today, what we are going to be looking at is some macroeconomic events happening in the past week, as well as the Bitcoin cycle and where we think we are in that Bitcoin cycle and how, and basically from our trading team, me, Sia, and our other trading members, what our thoughts are about the market and where we think we will be headed for the rest of the year. We have taken a lot of time to consider all the options, and we will provide you guys with some insight. Let us know if you agree or disagree, and we can have a discussion around that. And then after that, I will be basically guiding you guys through some trades that I am placing personally and we are placing on the trading desk. And then we will look at the Shanghai upgrade and a sample portfolio construction that I will use, either a risky one or a less risky normalized one. So basically that is what we're going to be covering today. I'm assuming there's no questions right now, right, Sia?
No questions right now.
Okay. Sounds good. Great. All right. Let me share my screen. One time. Let me find the screen first. Okay, here we go. All right. So, can you see my screen? Can you guys all see my screen?
Yes, I can see your screen.
Let me pull up the chat. Give me one sec. See, you guys see my screen, right?
Yes, I can see your screen.
Okay, nice. Let me pull up the chat. Hello. Nice. So we have a question. I think we have a question already, but I'm gonna go over it. Yeah, I'm gonna go over it in a little bit, not right now. But basically, you guys see my screen. You guys see this chart right now. People have really appreciated this chart. And Bitcoin, as we all know, has really followed the 4-year cycle throughout its lifespan, right? We do believe the 4-year cycle will continue, but as more and more people join Bitcoin and get in crypto in general, we believe the cycle will be less pronounced. Just because something happens in the past doesn't mean it will repeat itself. But of course, us as humans, we like to recognize patterns in anything from stocks, crypto, farms, weather, right? And we want to be able to kind of make predictions on what will happen based on the past. So as this chart describes, we hit the bottom in 2022, and this is comparable to the bottom in 2019 and 2015, and now we are having a bounce right on the way up. But we don't believe this is more comparable to 2019, but we actually believe right now the trend is kind of similar to what's going on in 2020, right? Back in 2019, there was a lot of good news surrounding, let's say, um, lots of new margin trading being added, governments exploring blockchain to see what kind of use case they would have in different, in government, in their banking system and things like that. And we also had Facebook making their own blockchain, the Libra blockchain, right? So even though that didn't come to fruition, there was a lot of positive sentiment, a lot of news in the markets. But right now, we don't really see that, right? Right now, we see the United States cracking down on crypto. We see Europe also a little bit cracking down on crypto. And with the whole lawsuit going on against Binance, FTX, it's just so many crypto exchanges collapsed in the past year. I feel like there is more just neutrality right now, and maybe even on the negative sentiment side than the positive sentiment side. So from my point of view, this is more like 2020 after COVID, where Bitcoin kind of dipped, had a bounce, of course, but kind of just went sideways and consolidated for a while. And we're gonna share how we are really viewing the market and what direction, what kind of target we have for Bitcoin this year, uh, in a little bit. But just so you guys know, according to the 4-year cycle chart, right now we are in basically the run-up phase where we retest, let's say, a 50% retracement, maybe 36,000, maybe 40,000, based on historical analysis. But we here at Pinex don't believe that will play out the same way as the past 4 years. That might be a hot take because a lot of people really believe in this type of price action, right? All right, so let me move on to some macroeconomic factors. And you guys might be wondering why this is related to Bitcoin, which I will cover very soon. So basically, OPEC, they are basically an oil cartel. It's just made up of a couple countries like Saudi Arabia, Russia, I think Iran. I don't know, but it's made up of a lot of the oil producing countries, right? And the OPEC basically announced a surprise oil output cut. That means oil prices shot up, right? So let's look at this chart. So because they cut the output to oil, we saw oil just rip to the upside almost basically 10%. Let's see how much this was. Right overnight, it ripped up 8%. So of course, the Fed has been trying, governments around the world have been trying to fight inflation, and this is not what they want to see. Oil prices going up 8% overnight, and OPEC cutting oil production, right? So this kind of tells us that inflation, even though it's coming down, with OPEC kind of going against it, this might give central banks around the world some pause for them to consider, is maybe cutting rates right now a good time. So how will this tie into Bitcoin, right? So Bitcoin, of course, is also affected by the macroeconomic economy. And let me share with you guys this. And oil is one big component of the world economy. So with this price of oil increases, Saudi Arabia is actually considering accepting the yuan instead of dollar for oil sales, right? This is something that has been developing. People have been flooding to wanting the American dollar as a reserve currency less and less in the recent times, and oil and America's currency, the U.S. dollar, was so strong because everything was based in the USD, right? Oil is priced in the U.S. dollar, so if people wanted to buy oil, they have to buy dollar first, convert their local currency into the U.S. dollar before buying something like oil because it is the world accepted currency. But now Saudi Arabia is saying, hey, we might be willing to take things that are not the dollar, like maybe the yuan, maybe the Russian ruble, maybe the Indian currency, right, from India. So this is a big development. And let me see. Let's share this one right here. So basically within the past year or two, the US dollar as a share of the global reserve currency has been falling down. That's not something the US wants to see, because the reason the US dominates the market is because everyone uses the US dollar, right? So let me find this chart. So basically, the share of US dollar as global reserve currency dropped to 58.4% at the end of the Q4. This was the dollar's lowest share of global reserve currency since 1994, right? So what does this mean? The dollar is weakening, and people around and countries around the world they do not want to hold the US dollar anymore. They don't want to depend on the US. So of course, if the dollar weakens, let's tie this back into how this affects Bitcoin, right? Most people, when you're trading Bitcoin around the world, you're pricing it in USD. A lot of people use the pair BTC USDT, right? A lot of stable coins are priced in USD. So as the dollar weakens, Bitcoin price will go up, because Bitcoin does not care what the US dollar does. So if the US dollar is worth less, Bitcoin's price in USD will go up. And as you can see in the next chart that I shared, the US dollar has a very negative correlation with Bitcoin. So that means whenever the US dollar fell, Bitcoin went up. Whenever the US dollar went up, Bitcoin went down. That makes sense logically, right? Because Bitcoin, a lot of the times, is priced in the US dollar. So if you guys can look at the bottom, I know this chart's a little bit messy, but if you guys look at the bottom, CC right here, that means correlation coefficient. You guys can see a highly negative correlation. So this is comparing the dollar to Bitcoin. And let me share with you guys this screen. And since basically but basically, ever since with the Russian conflict, a lot of people wanted to depend less on the USD, right? Back then, people held more USD than their national currency as reserve, because US dollars are the most stable. But you can see, as China right now, right? China has been aggressively buying gold for the first time since December 18th, right? What does that tell you? That tells you people are losing more trust in the US dollar, and they want to go into a more stable currency such as gold, right? And as gold's price rises because of the demand, what do you expect will happen to Bitcoin? So Bitcoin, of course, you guys know, is the digital gold. Bitcoin recently had actually almost a 1-to-1 correlation with gold. If you look at the top half of this chart right here, at 90 in the recent 30 days, Bitcoin and gold had a 91% correlation, right? So what does that tell you guys? That tells you guys, as gold goes up, as more countries want gold and want to get out of the US dollar, we can see Bitcoin's price rise as well. So that means if gold goes up, Bitcoin will go up. And Bitcoin is now more being priced as a hedge currency, right? As a inflation protection. And it is losing its status as a risk asset, and now becoming more of a legitimate protection asset against inflation, against bank runs, against economies failing. So this is definitely what we wanted to see Bitcoin developing into, being a more mature asset. And if you guys look in the middle chart right here, this is the correlation of Bitcoin and the SPY. You can see this correlation has been weakening over time, which is what we want to see, because we want Bitcoin to be its own asset and not be correlated with the American stock market, right? Because that would be the opposite of what Bitcoin was made to do. And well, basically, when this was happening, the U.S. If you guys look at the economy, we had some good, we have some bad data last week, right? We have the manufacturing PMI, which is basically saying how weak or how strong is the America's manufacturing industry. We got 46.3. Basically, anything under 50 means that sector of the economy is in a recession. So right now, we were forecasting a 47.5, which is already recessionary numbers, but we came in even weaker than that at 46.3. So that means America's economy is showing cracks, and it is not doing super well right now. We're finally seeing the effects of high interest rates and what it's doing on the economy. And of course, we can see this through other numbers as well. For example, the job openings, this has fell to 9.9 million versus a forecasted of 10.4 million. This is the first time the number of jobs in America has fallen over 10 million, fallen under 10 million openings ever since the pandemic, right? So of course, this is one of the main factors the Fed wanted to see in order to pivot and decrease rates again. They wanted to see jobs lessening, unemployment rising, and this is what they're getting. This is what we are finally seeing the economy weakening in the United States. And of course, we want to see the Fed pivot, right? If the Fed pivots, if they are adding more liquidity, they're adding more money into the system, Bitcoin is going to run up because Bitcoin is used to hedge that unlimited money printing. All right. Does anyone have any questions?
One question is from Niall Babs.
What is the Fed balance sheet and Bitcoin relationship? As the Fed, so basically, as the Fed balance sheet goes up, so the Fed is taking, the Fed is printing more money, Bitcoin goes up. That is the simple relationship because Bitcoin is used as a hedge to the Fed's unlimited printing, right? As the currency gets more devalued, Bitcoin will act, first of all, liquidity will flow into Bitcoin and people, because just the amount of liquidity in the market. And then the second thing is just a hedge to the unlimited printing of the US dollar, right? The US cannot afford to pay back their loans. They're just going to keep on printing money to pay back interest and doing that over and over again until something breaks, right? So we believe that the US dollar is just going to weaken over time compared to other currencies just due to that unlimited printing, and Bitcoin will be a great hedge against that. So if you're leaving your money in US dollar terms, you're going to be losing a couple percentage each year for the foreseeable future. So it's better to put it into Bitcoin, where the price will be rising, will be a good hedge against the US dollar.
One more questions from Andy Garner. So doesn't the hedging action strengthen the correlation?
I'm not really sure about the question. So, I mean, if you're talking about, I guess, the Bitcoin correlation with the US dollar, so as there's more US dollar, Bitcoin price goes. I actually don't understand. I'm not super clear on the question. Can you ask it again?
Yes. So Andy Garner, can you ask it again to clarify the question?
Okay, I'm gonna go on ahead, and then if I see the question, I'm gonna answer it.
Yes. No
Sounds
problem.
good. Sounds good. So after that, so basically that little snippet on the economy, the macro economy in the United States, and what we see, right? What we see is more countries moving away from the U.S. dollar, and Bitcoin will stand to benefit from that because as the U.S. dollar weakens, Bitcoin's price will go up, and that is for sure. That is the correlation we have been seeing. So with OPEC and inflation and everything like that, and then people moving to different currencies, Bitcoin will benefit from that. Right now, what I have on my chart, what I have on my screen is the Bitcoin price and the short-term holder realized price. So the short-term holder realized price just means basically the people who are day trading, who just bought in, who are like the kind of visitors in the Bitcoin ecosystem. So the short-term holder is anyone holding Bitcoin under 155 days. So you just got in, you're not really a long-term holder, you're not a believer, you are just here for the now, right? And of course, over time, these develop into longer holders if they stick around. But as you guys can see, the short-term holder realized price has basically acted as a strong resistance level in the bear market. If you guys look at 2018, we see Bitcoin price having that huge dump onto 10,000, right? And then after every bounce, we basically reach the short-term holder realized price and we sell off. Why is that? Because the short-term holders are people who are basically trapped. Once prices come back to their price level, they want to get out. They're not here for the long run. They just wanted to make some money, get in, get out. And they're underwater. Most of them are underwater. So as prices come above their realized price, unless we're turning into a bull market, they're going to sell, right? So when we cross over that short-term holders realized price, it means there's more demand for Bitcoin than those sellers are putting out. So for example, 2019, the bottom of 2019, right, when the Bitcoin's price crossed over the short-term holders realized price of 4,000, we saw a big rally up because we broke over that strong area of sellers, and after that, it was kind of like clear skies above. And we can see that short-term holders realized price kind of have a steep decline when Bitcoin dropped to 3,000 down here. That's because probably the holders from before, they just wanted to get out at any price possible because they just didn't want to hold after taking such a big loss. And then as those people get liquidated and washed out the market, the short-term holder realized price can decrease into a very low level. It almost matched the price of Bitcoin, right? And as price of Bitcoin comes over that realized price, then we can see a bull run. And of course, this happened this cycle as well, as you guys can see. After we dumped to basically had the whole Ukraine war happening, prices dumped to 35K, bounced, and this of course Luna happened around here, three arrows, and then we got FTX, right? So when prices bounced back up into the short-term holders realized price, we got resistance, and we started pulling back. Once we met that resistance again, started pulling back. And of course, after FTX, people started accumulating, and then we see a break over the short-term holders realized price, and we see prices just shooting up to the upside after breaking through that resistance level. And of course, during the SVB incident, we see prices pulling back. And where did prices pull back to? Right into the short-term holders realized price. And we were calling this on the live stream, I think 2-3 weeks ago. We were telling everybody on the live stream, the 200-day moving average, which coincides with the short-term holder realized price, is a good area to dip by, to build a position in Bitcoin because of the confluence of these support levels, right? And as we can see, this has once again proven to be a great indicator to look at. I was gonna take a look at the chat.
Yes.
All right. So, more correlation with the U.S. stock market, if the U.S. dollar. So there is a good amount of correlation with the U.S. stock market right now, and it has had a correlation because of the whole its sensitivity to interest rates, right? When the Fed kind of restricted liquidity in the markets, Bitcoin fell because of the lack of liquidity, and it's kind of people pricing it as a tech stock. But as you can see during the SVB incident, as the market fell, Bitcoin did fall, but Bitcoin had a strong reversal, right? And that to me is a changing fundamental character of Bitcoin, because it is now kind of seeing a correlation to gold. Gold shot up during the SVB whole fiasco, and so did Bitcoin, right? So this kind of showed me, instead of, if it was still correlated with the U.S. stock market, Bitcoin would have just fell. Bitcoin wouldn't have had that 38% rally in one day. So of course, I'm not saying right now Bitcoin is already a hedge asset, but I'm saying now we are seeing signs of it changing, right? It's like 50-50. Now it's kind of like, oh, this SVB incident, Bitcoin worked as like basically like digital gold to hedge that risk. But we have to continue on to see how it will react during, for example, if US goes into a recession, how it will react in a recession, how will it still be correlated with gold, or will it be more correlated with the market? But the hedging wise, it will be a little bit correlated to the market, because as more money gets printed, stocks go up, people want to hedge, people want to own an asset that produces money. So in that sense, Bitcoin is a bit correlated to the market, but I think it's not really the fact that it is like a risky asset. It's more of the fact that it is a hedge to inflation, and so is stocks, right? Stocks is used to hedge unlimited printing of currency, because because a company is an actual asset. All right, let's continue on.
Wait a second, Jay. There's one more question. So what are you thinking about buying of gold now?
I think gold is not a bad buy, but I would just buy Bitcoin. Bitcoin and gold are very correlated right now, as we just talked about. So gold has this crazy rally up, so did Bitcoin. So yeah, buying gold is not a bad idea, but if you want to diversify. But basically, I would just buy Bitcoin. I would just personally buy Bitcoin. Let me see. So basically, our thoughts on the market right now, right? Let me show you guys this. Give me 1 second. So our thoughts on the market right now, we think it's looking more like 2020, where Bitcoin kind of consolidates. We think the low has been put in 15K. That was a deviation from its strong support level of 18,000. That was the long-term holder realized price, and that basically a very strong level. So following previous market structures, Bitcoin always came back down to the all-time high of last cycle. So for example, in 2018, it came back to 3,000, where the Bitcoin rally started from. And this time it came back down to 18,000. Supposedly should have stopped at 18,000, because that was all-time high during the last market cycle. But with the FTX collapse, we see price deviate from that really strong support level. So this, after we reclaim back that 18,000 support, this can be basically determined as a deviation from regular price structure. So we believe the Bitcoin low is in. 15K was the low, 20K was a dip buy opportunity. Let me put on the SMA, the 200-day moving average right here. Now we see the 200-day moving average sloping up, right? We believe that 29K to 30K is a very strong resistance level. We don't. So basically we see the ultimate high of this year to be around 36K to 37K, and we don't think Bitcoin is going to be retracing under 25,000. Currently, my view though is that Bitcoin will consolidate sideways for a little bit and maybe have a slow move down, just in a regular low volatility environment. For example, back in 2020, if you guys see right here, after the COVID dip, we went up. We had a strong bounce, ran into support, and consolidated for around 3 months, and then had a breakout, and then just started moving up. I believe this same type of pattern will happen. We're not going to revisit lows. We're not going to have a deep correction, but instead just kind of consolidate, maybe pull back to 25K and wait for the 200 moving average to move up, to kind of slope up and to catch up to the price. So right now, if we move sideways for a couple of months, maybe retrace to 25K, I can see this 200-day moving average moving up to like 23,000. So that is the scenario that we have in mind, because we think the bottom is in. If you guys disagree, again, you guys can put it in the chat and tell me why. But we just believe that most of the bad news has already happened. FTX collapse, Luna, Three Arrows, Celsius. What else can you throw at the crypto market, right? What else can you guys imagine that can bring Bitcoin's price down? For me personally, I can't think of much. Maybe U.S. regulation, right? That is definitely one thing, the U.S. regulation, but they're not going to straight out ban Bitcoin. They're not going to ban crypto. I don't think that's very likely. And then the second thing is a U.S. recession. So that also is likely, but I don't believe we're going to get a deep recession. So will that have a impact on crypto price? Yes, but that is not enough of an impact to, let's say, get Bitcoin's price to dump to 20K or 18K again. If you guys have any other, scenarios or reasons in mind.
Yeah, so now Spabs just mentioned war, and Amir just mentioned USDT DPEG and
Mm-hmm,
collapse.
mm-hmm. War, okay, but what is the probability of war, right? That is that. So yes, so all those things could happen, but we have to consider in the probability. So basically, SEC saying altcoins, all the altcoins except for Bitcoin, is a security. That is a possibility, but will that be enacted within the next 2-3 years? I do not believe so. So, and in this current cycle, war, I do not believe will be happening either. I'll give that like a 1% probability. I'll take my chances on that one. You know what I mean? And let's think about this. If war happens, will you be using US dollar, or will you be using rubles, or would you be using Bitcoin? Like, I don't know. War actually might be good for Bitcoin price. USDT depeg and collapse. So the probability I would give that is also like maybe like a 2-3% chance, right? People have been saying the USDT depeg and collapse for the past, I don't know, ever since USDT came out, but it has never happened. Whenever there is a depeg, they always brought back up. There's too many institutions in it to let it depeg. As we can see, the USDC depeg was a buying opportunity. So I don't think that. So I don't think that will be a cause. And Crypto Meat says, I think we can test 15K, 16K. So that is what we were thinking also. That is the case that we want to believe in, but I just don't think that's going to happen anymore. We were thinking 15, 16K when SVB collapsed, right? We were thinking maybe it'll retrace to 17K for a better low. But as we can see, the US Fed reacted so quick, they just reversed this whole pullback and just went on like, how much was this? Basically 50% run up. So due to this low put in here, I do not think we're gonna get back to 20K. My base case used to be 20K, 22K, but since we already got this test right here, I just don't believe that we're gonna come back here anymore. I think maximum 23K, but right now I believe 25K, 26K will offer to be a good support area to get in. Let me
Okay,
see.
Jay, wait a second. There's one question about the best buying zone of BTC right now.
Yes. Name I cannot say. No idea how to say that. There is no chance. Best buying zone, like I just talked about, 25K. 25K, 26K will be a good buying zone. I mean, 20K is the best, but I just don't think we will get there. So you have to consider the probability of getting there, right? And of course, we're going to go into some trades and what strategies you guys can use if you guys are not in Bitcoin right now. So taking a look at this chart, this is basically long and short positioning. I shared this last time, and we can see there's a large amount of leverage shorts in this 29K area, right? So we have been getting rejected at 28K, 29K for a while. So if we can break into this 29K, I believe we can liquidate all these shorts, all these short traders, and basically shoot up to 32K and maybe consolidate, liquidate some more short traders at this 34K, and basically jump to 36, 37K. And that would mark the top for this year. That is my view. And if you guys can see, on the downside, we see this poor structure, right? There's not many leveraged longs. There's not many people long in general because not a lot of people on that crazy rip up, they didn't catch this rally. we see no people at 24K, a little people at 25K, and then some more at 23K, right? And at 20K, there's a lot more. So in this type of structure, what this is telling you is that people wanted to get in, but they did not get the chance. So when prices pull back to 25K, even though a lot of people didn't buy there, we expect a lot of people to jump in because they want to get on the train, right? They want to get on Bitcoin. They of course, more people want to buy at 22K, but if the market is strong as we think it is, right? If we are right in our scenario, we should not get to that point because people will be jumping on the first chance they get for fear of missing out, right? So it's all human psychology. They don't want to miss out on the large trend because they want to save a couple of dollars. All right. Let me share this tab. All right. So next, I'm going to go over the strategy I will be implementing to basically dip buy. I was able to get Bitcoin at 20,000 and I sold it at 28,000. So now I'm looking to basically invest some money to get back into Bitcoin, right? So I would use the structured products on Pinex because, first of all, it's basically like a limit order, and it also gives you yield in case we don't reach it. So a lot of people think we're not even going to reach 25K, 26K could be the bottom. So what I would suggest is, let's say you have 10,000 USD, you want to convert into Bitcoin. I would maybe do half 25K and then 25% at 26K. And then the rest of the 25%, I will hold on to it. And then if prices start coming down, I would do like maybe 22K, 23K with buy the dip orders, right? So this way you can earn yield in your money. You can earn yield on your USDT if you don't get the chance to buy it. But if you do get the chance to buy it, then you get yield and you buy at a good price. So of course, we're traders, and at our desk, we trade structured products. We do these buy the dips every day, and what we do is 1 to 2 day products, right? 1 to 2 day products, and we don't want to get executed. So we would sell kind of like far out of the money. But because you guys are not scared, this is assuming you want to build a position in Bitcoin to capture to ride the ride to 36K, then you guys can be more aggressive in placing your orders. So for example, you guys see the 7-day expiration, 26K, right? Like I said, I would put in 25% of whatever amount you want to be investing into a product like this, and then just kind of roll it over week by week. So if you guys look at the chart, right? Look at the chart I was showing. I believe the next couple of weeks we're just gonna go sideways. We're not even gonna reach. We're not even gonna reach 26K. So if we're gonna go sideways, you're probably not making any money like day trading, and because the range is very small. But but your money will still be generating you 20% annualized, right? Annualized on annualized terms if you're invested in structured products. So exactly 20% right here on the 7-day product, right? 26K strike. So this is something I want to buy. So boom, this is what I would do, right? 7-day, 2,600. I think this is what I placed last time. So this I want to buy 2,200, but us getting there, low chance, right? So I'm basically just making free yield on this. So then at 25K, let me look at the 25K one. Let's see how much yield I can get for 25K. 25K 14-day, you get 16%. And then I think I was looking at a 7-day one for 25,000. You get only 6%. So I don't really like that 6%. I'd rather just wait 14 days because I believe in the next 2 weeks, Bitcoin price is going to go sideways anyways. So I'd rather take that 16% in free yield. And then for this one, I'll put in more, right? Actually, let me put in even more. I'll put in 3,000 on this. So now we're just basically earning yield while waiting for Bitcoin to come to our price. This is a strategy we do on the desk for clients as well. We ladder our buys because our clients have a similar view to us, and when laddering our buys, we get a better entry and save some cash in case Bitcoin comes down below 25K, and if it reclaims, right, we'll just get back in. We'll just mark it in. And then for the rest of my money, I would probably leave it at 24 or 23K. Let me see. These yields are a little bit lower though. Let me see. So 23K, 21 days, or 2450. So in this case, I'd probably do like 23K for 7%, right? But in my case, I want to actually just hold USDT and just buy it as prices come down. Dual investment, you can think of it as a limit order, but while your limit order is waiting, you get interest on your money. That's a very simple way of explaining dual investment. So basically, if you let's see my products running orders. So for this one, right, I chose 25,000. So I will buy at 25,000 if prices come to 25,000 within 14. Is this 14 days or 21 days?
I think 7 days.
No, this is 14. Yeah, no, this one's 14 days. So after 14 days, if price is under 25K, I'm gonna buy it at 25K. Right? If prices are not 25K, I get $18 in interest. If prices are at 25K and I buy it, you'll also receive the interest. So it's basically a limit order that you get interest on. This is I love using buy the dip products for just to ladder into your position. All right. Does anyone have any questions on the strategy I just shared?
Any more questions?
Okay, if not, good. I hope I answered Crypto Me's question about what that is. So next, we're gonna talk a little bit quickly about the Ethereum Shanghai upgrade, right? So as you guys see, there's a lot of headlines saying, "Oh, Ethereum's Shanghai upgrade is going to bring a lot of selling pressure from CoinDesk, $2.4 billion of selling pressure to ETH." We don't believe it's going to be a big deal. We actually think the Shanghai upgrade is going to be a good thing. Right now, we see Ethereum outperforming Bitcoin, right? Ethereum has been running up while Bitcoin has been consolidating. The same thing happened back in 2020. That is why we're comparing this we're comparing now with 2020. We believe Bitcoin is going to be in a low volatility zone, just kind of consolidating, and Ethereum is going to be having like a short-term little bit of a bull run. Why don't we believe, right, that the selling pressure is not a big deal? So for Ethereum, during the Shanghai upgrade, you're going to be able to pull the staked Ethereum out. So the people who staked millions and billions of Ethereum, they can now unstake it, get the rewards, and sell it on the market. But the thing with that is there's already liquid staking. So 50% of staked Ether can actually be sold on the open market right now because they have liquid staking. So even though you can't unstake it, you basically got the IOU to sell it whenever you like. That is what people have on like Coinbase, Lido, things like that, right? So 50% of that volume can already be sold on the market. So it's not like, oh, Ethereum's unlocked, everybody's just going to go sell. Let me see. Let me show you guys right here. Currently, 42.7 of all staked ETH is participating in liquid staking pools. So there you go. So that just represents that there will not be as much selling pressure as people think. And also, the Shanghai upgrade has been like long awaited, right? People have been thinking, oh, Ethereum is a scam. We can never unstake. If this upgrade passes through, I believe more people will actually come in and stake their Ethereum because now they know for a fact that they can pull their Ethereum out anytime they want. So on this upgrade, I believe it will actually be a bullish catalyst for the Ethereum price movement if the Shanghai upgrade passes with no complications, right? Okay, yeah, I saw Sia just answer that. That's cool. Yeah, let me move to the next chart. So we believe it is kind of like Ethereum season right now, right? A little bit of the Ethereum season. So if you guys have been in crypto for a long time, you guys know this chart. This is how kind of money flows, right? Money goes into Bitcoin. Bitcoin goes up. Bitcoin dominance goes up, right? Bitcoin struggles, Bitcoin kind of consolidates, which is what it's doing right now. And then Ethereum goes up as money kind of flows from Bitcoin to Ethereum, because there's narratives about staking or Shanghai upgrade or whatever that happens. And then after Ethereum goes up, money flows out of Ethereum and goes into the large cap, like blue chip cryptos, kind of like ADA, XRP, LTC, things like that, right? And after the large caps had their fun, usually at the end of the bull market, so in the 2021 2022 period, when we saw Bitcoin kind of falling down from like 60K to 30K, but we saw all altcoins ripping up. So altcoins are basically the last phase of the market. After Bitcoin tops, usually the small scam coins, Doge coins, coins like that, they start having their run. So right now we believe we are kind of in this Ethereum phase of the cycle. I believe this is kind of like a short cycle, because Bitcoin obviously is not even close to its all-time highs. Bitcoin just had a short rally, but I believe we're getting into kind of like an Ethereum cycle right now. And of course, looking at this altcoin season index, it's actually Bitcoin season right now, because this goes into consideration of kind of all of the altcoins versus Bitcoin, right? So most of altcoins are still underperforming Bitcoin, so that is why we are in a Bitcoin season. But Ethereum we can see Ethereum starting to outperform, so we kind of see that as moving into like a Ethereum season. Can Shanghai upgrade affect alts? I do not believe it's going to affect alts. Shanghai upgrade is mostly just going to affect Ethereum. I mean, if you consider Ethereum and alt, then yes, it will affect Ethereum, but just not alt in general. So this is kind of the portfolio that I am looking at. I'm not recommending you guys to copy all of these altcoins, and some of these I actually are not super familiar with, but I just know what they do and how they perform. So this is a sample portfolio of $100,000 portfolio of how I would split up my crypto holdings. So this is a relatively low risk, stable portfolio. I would do kind of like 50% or 60% Bitcoin, 20% Ethereum. And then for the top tokens, I would do like 2% each, 5% or 3%, and kind of split it up between 10 different lower cap or kind of like these bigger cap cryptos. That just depends on what you like, right? You want to have a diversified portfolio. So for example, you want to have a layer ones, layer twos. So like Matic, ADA. You want to have like DeFi, like DOT, and then like Avi, right? You want to have and you want to have exposure to NFTs. So Immutable X. You want to have exposure to GameFi. So you have Mana on there. You could also have exposure to kind of crypto infrastructure stuff. So like Graph, GRT, and then STX, Ordinal on top of Bitcoin, right? So kind of like a layer one for Bitcoin. So you want to basically find your favorite altcoin, and then contribute a couple, percentages into that, and just have a altcoin for each different section of the crypto market, each different sector, basically. So this is more of a stable, low risk, because most of your money is in Bitcoin, and Bitcoin is not going to go to zero, right? Bitcoin and Ethereum. If you guys want a more risky portfolio allocation, then just decrease your allocation into Bitcoin. So for example, this would be my risky, more YOLO, not full YOLO, but a little bit. I would only put in like 25%, 20% into Bitcoin, Ethereum 20%, and then all other altcoins 5 to 10%. So for example, Matic 11%, Filecoin 6%, LRC 5%, Immutable X 5%, GMX, everything else like 5 to 3%. So basically just increase allocation to the altcoins. I don't recommend you guys buy like 100 altcoins. Just get the top ones of each sector and just hold it, whatever you like the best, right? I like Phantom personally, just because it's a fast chain, even though I know there's a lot of issues on there but I just like DeFi farming. I like the whole Phantom theme. I know there's definitely better ones. Like Matic is very good. because their partnerships with Disney, Starbucks, NFTs, speed, right? So just you guys can add whatever you guys like. And let me see. And of course, altcoins right now are kind of just consolidating, and we have structured products, so buy the dip for altcoins as well. If you guys are holding like a big amount of altcoins, you guys can sell. You guys can use covered gain to earn yield on your altcoins, right? Or if you guys have cash, just like what we described before, and want to buy into altcoins, then you can use buy the dip product, right? So if you want to buy XRP because you think XRP is going to rip up due to this is selling XRP, my bad. If you want to buy XRP, let me find XRP. It's right here. So if you guys want to buy XRP because you think Ripple's gonna win the lawsuit and Ripple's gonna have a big run, even though it's having a run already, then you guys can come over here. Let me look at the Ripple chart really quickly. So Ripple is above. Okay, Ripple's looking good. Had a big. So let's say 48 cents is support. 48 cents is support, and I want to buy at 48 cents, right? Go back to the Ripple page. 48 cents. Let me see. Aggressive. 7-day, 48 cents. 48 cents, 17% return. So if you guys are waiting and you want to accumulate altcoins and do you think they're too high above your price target, you guys can come over and try out the buy the dip on things like Ripple, right? So I just put in a buy order for Ripple, 17% return, annualized, and 48 cent, 48 cent price target. I think I was sharing the wrong tab. But I play, for this. I'll just go show it again. No problem. So this is what I'd be looking at: 48 cents, 7 days, 18% return. So like a 6% drawdown, and you're getting paid to basically wait for it to drop down. Yeah, I mean, this chart pattern. This isn't. I don't really see this as a head and shoulders. I'm already actually long XRP. I've been long since like 35 cents, just expecting them to kind of like win the lawsuit because they really don't have a case for XRP, but just showing what to do if people are not long already. So this it's not really a head and shoulders. It's more of just like a U bottom, right? Strong resistance. And let's put up some indicators. Let's look at some volume. Strong resistance at this 48 cents. We came back above, couldn't hold it. We retested it here, got rejected, broke over, and we retraced back, right? So I would feel comfortable buying at this 48 cents. So that's why I would use a structured product to kind of get yourself into a position. But also, if you guys are holding something like LRC, right, that's just kind of like consolidating and not moving, you guys can sell. You guys can basically use covered gain to get some yield while you're holding this. So let me go back to our platform. All right. So once you go to structured products, come over here, select LRC. I mean, look at these high yields, right? Let's see. So right now we've been consolidating between 34 cents and 38 cents for the longest time. And 38 cents is like the very tippy top. So probably like 37 cents. So let's see, 37 cents. So 2-day, 37 cents, 34% for your LRC, right? I mean, I'm not holding any LRC, but just an example for people who are holding LRC, you guys are tired of it just going sideways, come over here and sell us a covered gain. As long as it doesn't go above 37 cents, you're just going to get free returns, right? And you don't have to sell your LRC. So I love this product for for charts that look like this. It's just not going anywhere, and it's not alt season yet, so it's probably just gonna go sideways for the longest time. So I love covered gain when looking at charts that are similar to LRC. All right. I think that is all I wanted to cover today. I think I talked a lot. Do you guys have any questions? Let's do some Q&A.
Yes, we missed one question from Amir. He asked about what tops do you expect for ETH this year?
Okay. ETH top. So Bitcoin top, we're expecting 36,000. ETH, if we can get this, if Shanghai upgrade goes well, I believe we can break over 2,000. I'm thinking around 2,400. So I'm thinking around 2,004 to 2,500 as the top for this year.
Any more questions?
No problem, Amir. Yeah, you guys see all this strong volume down here, all this accumulation. I really don't believe we're gonna go back down to these levels, right? So much accumulation in here. I think Ethereum, we're probably gonna try to break over 2,500, but I don't believe we're gonna do it this year. Let's look at Bitcoin. So for Bitcoin, same thing. We have a big, large accumulation at 16,000. Really wish I bought more at 16,000. And then we see more accumulation here at 23,000 as well. 25,000, not too much accumulation, meaning people wasn't able to get in their positions. Yep.
Yeah, Jay. So, there's one
Yeah, I
question
see
about
the question.
Fibonacci.
I mean, I don't use Fibonacci as much, to be honest. I mean, I use it a little bit. I mean, it's more of just a. Let me just pull up a chart. Clean chart. Mostly, it's just like theory, right? Fibonacci's, it's just like prices move evenly. It's like they make retracements 50%. Like let's say Bitcoin. I'll draw Fibonacci right now from top to bottom, right? The 38.2 level coincides with our basically 36K target, right? And it's just these magical golden numbers that they're called because they happen in nature and people just love using love using them. It's kind of a belief. You have to believe in it. It does work. Sometimes it's not like a end all be all system, but it's just a system based on these numbers. So for example, let's see. I like using them for like retracements. Let's see, we had this run up right from the bottom 15k to the top 25k. We see a retrace back to around the 50% level, which was basically 20k. This coincided with the 200-day moving average. So this is how you use it. I mean, the theory behind it, you would have to kind of like read up on it and why it works and see for yourself if you want to use it. But it's basically just drawing the bottom to the top and then seeing where it can retrace to. So for example, if I draw it on this right here from the bottom, I would actually draw it from 20k because you usually draw it from the new low to the new high. So as you can see, the new low to the new high, a 38.2%, I mean 38.2 Fibonacci pullback is around 25k, right? So this if you believed in it, would be used as a support level to buy, and this coincided with the top of the previous top, and then the 50% retracement coincides with 24K, which is another good level. I don't really use Fibonacci's as much. I just use it on top of other indicators, just for confirmation, but not the best person to teach Fibonacci's. Not a problem. Not a problem. Yeah, dual investment on Pinex. We have multiple on YouTube. Maybe Sia can link one in here.
Yeah.
That you like. But basically, if you follow, you guys can rewatch the live stream, see what I said about how to place orders for Bitcoin. Um, because that's the general strategy I would use. So if you believe, it's just find a level that you're comfortable buying crypto, your Bitcoin or whatever altcoin that you have, and then just place orders around that area and wait till it hits your level, or you get free yield, right? Um, or another strategy that we do on the trading desk is we just sell the options, but we don't want to get executed because some of our clients they just want to make money, right? They just want to make return on their US dollars. They don't even want to be in crypto. So we will just do 1 day, 2 day options, right? Like 20, let's say price, let's go back to, so it's a bad example today because the market's closed. So volatility is very low. So you get lower returns. For example, we have US dollars. We wanted to buy Bitcoin. We don't really care. We don't really want to buy it. We just want to make money, right? So prices right now for Bitcoin is 28,000. Let's just say 28,000. So I wouldn't buy this. This is way too close because this will get executed. I don't know, probably very, very, very close, right? So this is a bad example today because volatility is low because market's closed. So I would do like a 2 day 27,000, right? So 3%. I don't believe over the weekend Bitcoin is going to fall because market's closed. Institutional traders are off on the weekends. There's very low volatilities in general. So this expires on Sunday morning in the AM. So this is something we would invest in on the trading desk just to make yield, but usually it will be higher returns than this. Yeah, structured product is not available in the US unless you are a accredited investor, meaning I think you make over 200K a year or you have $1 million in net worth. Then we can talk about it and work something out. But for the retail trader, it's not available yet just due to regulations in the US. But we are getting the proper licensing, and it might be available towards the end of the year. All right, cool. Is there any other questions? No problem, Crypto Meat. Thank you for asking so many questions. Certification. Yeah, I think, yeah, or a certification. I'm not really positive on which one, but yeah, if you're like if you're like a savvy financial trader or person with licensing, then yes, you could probably trade it. But we would have to confirm with that. All right. Looks good. If nobody has any more questions, we are going to end it there. Thank you everybody for joining. Appreciate all of you guys for asking questions. We love questions because they makes the stream more interactive and fun. And yeah. Oh, sure. Got one more question. What is the question about ADA? I'm not a super. I'm not a believer. I'm not a super believer of ADA, so don't ask me any fundamental stuff because I will not know it. I would definitely not know it. Thank you, Claudio. No problem, Amir. Every week we're gonna be here. We're gonna put some kind of education, either market updates, live trading, or whatever you guys want to hear. We're gonna be here. Make sure you guys like and subscribe to the channel so you guys are alerted, and we keep growing. We keep building a bigger community. It's more people in crypto, higher the prices go. So keeping that in mind, we're gonna pump the backs. I'm not sure if Crypto Meat still has a question.
Maybe he's still composing the question.
Andy, could you put faces smaller? We could look into that, but we would have to use a different software.
Mm-hmm.
This one only lets us do it this way, but I understand what you're saying. Maybe we can figure something out for that next time. Find a different software. Okay. Sounds good. Thank you, everybody, for coming. I hope you guys have a wonderful rest of your day, and I will see you next week. If you guys have anything you guys want to talk about next week, any kind of topics you want me to cover, make sure to contact me or Sia, or just on the Discord or on Telegram, anywhere. Sia can put our emails in the chat box. If you guys got any questions, just email us. And yeah, thank you guys for joining.
Thank you all.
Thanks, guys. And the Telegram's in the chat. You guys can just, I guess, Sia can
have a great weekend.
Yeah, have a good weekend, everybody. Bye, guys. Yeah, just leave it. Yeah, I guess just leave the chat open for a little bit.
Yes.
I'm going to hop off. Bye, guys.
Bye, guys.